Welcome to the High Value Sales Show of Eversprint.com. I'm Malcolm Louie, the managing member of Eversprint, and today we're speaking with Nik Tsoukales, the president and CEO of Key Credit Repair, a company that helps consumers that are struggling to get credit by dramatically increasing their credit scores. Welcome to the call, Nik.
Malcolm, thank you so much for having me on. This is a great honor. I love your show.
Nik, you grew your company's revenue from $1.9 million in 2014 and $4.6 million in 2017, a 139% increase, and now you're on track to hit around $5.5 million in 2018. Two questions for you. One, can you give a quick overview as to how your company differs from all the other credit repair agencies and businesses out there? And the second question is, what were the three biggest drivers of your success?
Yeah, the big thing that we focus on here at Key Credit Repair really is not paying attention to, what you call quote unquote competitors. We do our own thing. The way we structure and create our programs has nothing to do with, again, the quote unquote marketplace. We focus on creating programs that are very specific to the client's needs. The client has a credit issue. They need to buy a house. They need to move out of their rental. And we structure and create and tailor the program for that. The client understands that. When they call us, they're not going to get the same experience they'd get anywhere because we just don't pay attention to anyone else. From the way we do our pricing to the way we do our consultation to the way we actually do the actual credit repair program is far, far different than anyone else. So I would say that's the biggest difference between us and the others, that we just don't pay attention to the others at all. We just really kind of stay in our lane.
All right, fantastic. Yeah, man, that makes a lot of sense as well, right? Because if you provide a totally unique service, you really don't have any competition, right?
Well, that's the biggest thing. If you start Google searching your, other companies that are in the same space, and you start looking at their websites, and everyone starts doing that, what ends up happening? You kind of commoditize your business. Okay, you do it yourself. You start dropping a price to beat the other guy. Well, your client might not even be comparison shopping you and the other guy. They're just looking for a solution to their problem. That's what they're looking for. They're not looking to comparison shop, especially a service. They're looking for the service that solves their problem. So if you can hyper-focus on that, that makes a world of difference. Asking your clients, what are the issues that you're having? Even the way you structure the wording of your website, your landing pages, your ad, making sure that you hit that nerve. If you can't strike that nerve, it doesn't matter if you have a lower price than the next guy. People don't care about what they don't care about. They care about what they care about, which is their pain and getting that pain to go away. And that's the most important thing that we have to focus on. It has to be like that, or else businesses end up cannibalizing themselves. And you see it all the time. Look at online retailers. They cannibalize themselves. You have all these websites that sell travel services. They cannibalize themselves because it's just based on price. But no one's actually asking the customer what they want. It's not just about price. They want something. You need to be able to deliver that. And when you do, that's when you can actually charge a premium for it versus what the next guy's going to charge, because your customer's getting a higher value. It's cheaper to them in their eyes, but you might be making a better margin than the next guy, and it's something to really, really be focused in on.
So it sounds like one of the biggest drivers of your past success was simply delivering, giving what your market wants.
Oh, 100%. And then once you do that, being able to confidently ask for more business. So, we spend our fair share in digital marketing. We run plenty of Google ads and we want, what we call intention-based clients or leads, where people they're coming to our website because they're looking to solve a pain. We're not just cold calling people randomly. We're not running banner ads. Any digital marketing we do is intention-based. If Google searched what they need, their pain, and we're there to solve it. We match those needs. But that's only one piece of it. When you're doing a great job, you should be able to turn around and consistently or constantly ask for referrals. If your business is not producing referrals, it's a dead business. your client is, or your clients, they're your children, okay? And they need to give birth to grandchildren. Otherwise, what are you doing? Okay, your referrals turn into referrals, turn into referrals. Like we could take, we're not a network marketing company or multi-level marketing company at all, but we can take some, we can learn a lot from that industry. One client turns into another, turns into another. A lot of businesses are hesitant to ask for referrals consistently, obsessively, constantly, over and over and over, because they don't really have the confidence in what they do, in the service that they're offering. So what do? Instead of asking for clients, they're offering discounts constantly, right? Because they're not confident. If you're doing a heck of a job, okay, you can turn around and obsessively ask your clients for more business, and they will provide that growth for you. So step one, you have to do a heck of a job. Step two, part two, you got to be really unique, okay? You got to meet the needs of the client. And step three, you have to have the ask, and you have to do it obsessively. And the business will grow much, much quicker than scaling up, a marketing campaign or quote-unquote set of ads with Google. There's way more to business than that. We didn't even have Google a couple decades ago. Businesses were still here growing quickly. Inc. Magazine was still here growing quickly. Those lists were growing quickly. So we got to look past the Google and the Facebook. There's more.
Right. So you're saying here that your team actually proactively asks for referrals, right? Many businesses are referral based, but they're more passive about it.
Yeah, here's the thing. We've added all the mechanisms, all the tools, right? The emails that go out, the texts that go out, the pop-ups on the website, the little mailers that go out with the cards. We have all this great automation, and it's done it's done daily, hourly. There's so much stuff that's going out asking for the referrals. But if we do not actively have a campaign going, okay, where every phone call we're asking for a referral, it doesn't work. It's interesting. We've had streaks where we've noticed, even from listening to phone calls, where our guys have dropped the ball in terms of just asking for referrals. Okay, all the systems are still in place, the emails, all the fancy stuff. Our referral program is still in place. Our points program is still in place, but referrals drop drastically. As soon as we put together a mandatory program where every call is mentioned, we see that business go up dramatically. And talk about cost per acquisition, which is the biggest cost for most businesses. You have your HR and your marketing. That cost per acquisition can drop to close to nothing if you just ask. So you need a human being to connect to a human being. You got to go beyond the digital. It's got to be person to person, which sounds a little old school for a business that, we consider ourselves super high tech and very, very fast at doing things, and we use a ton of automation. But that ask is everything. It's gold. It's platinum.
Yeah, I have to ask. Let me table this for now, but I do have one question about how you go about asking for referrals. So going back to my original question, my earlier question about the three biggest drivers. So the first one is you're giving your market exactly what they want when it comes to repairing their credit score. Second one is that you're proactively and competently asking for referrals. Is there a third driver of your success?
Yes. I would say the daily metrics. Okay, so we run a system that I built out years ago called Pulse, and I named it Pulse because I wanted to have a clear pulse of our business, where it is today, where it's trending for the month, the quarter, and even the next year. But it's got to be done daily. So essentially what happens with our company is every single day we have this program. We punch in our previous days or our month-to-date sales or trending 30-day sales, advertising spend. The system will track our churn, how many clients we're losing versus taking on, our average ticket price in terms of billing, and a whole bunch of other things, even employee costs, commission payouts. I mean, this thing literally has our entire business on one page, by the way. It's simple, but it has a lot of detail. And what this thing will do is it will spit out and project for me we'll get a projected month to date, or excuse me, we'll get a projected monthly revenue snapshot, profit snapshot, quarterly snapshot, annual snapshot, or snapshot, and ongoing for the next 12 months. And I'm able to see just from the previous day's production, I'm able to see those numbers sometimes shift very drastically. Okay. And as a result, that same system has we've reverse engineered that system where we can turn around and punch in a profit goal, and this system will actually reverse engineer and tell me how many people we need on staff, what we need to be doing for daily sales, what our retention needs to look like, and we can actually project out that goal and build towards that goal. So the daily metrics is everything, especially the sales metrics. Every single day, every single hour, we push for that target. If our target's 50 clients today, we are not watching the clock. We are watching the sales. Until we get to that number, we're not walking out of here. Right. Because we know what type of an effect it could have for the next 12 months if we keep doing that. You can add a little every day. It will drastically grow the business.
Right. So if your team hits your target within the first 3 hours, you guys call it a day? Take the rest of the day off?
No, absolutely not. We're going to go for another 10. Our team, we have, we're big, Grant Cardone, 10X fans. We're big fans of Tim Grover, who was a personal trainer for Michael Jordan. He has this concept, you're a cleaner, a cooler, or a closer. And here at Key Credit, we only accept his top tier, which is cleaner, which is really just obsessive about success. It's actually a prerequisite at our company that you have to read that book before starting here. And the reason for that is so people, when they start, they understand how obsessed we are with our success. Because people that from the outside looking in might think we're a little nuts when they get here. And they see how hard we work, and they see the type of teamwork that we have. It's not your typical corporate America passive place. And we're not one of these startups from Silicon Valley that's sitting around playing ping pong either. Those guys are mostly going bust in the next year.
Right.
This is a real business, and we hustle hard.
Yeah. What's the name of that book that you mentioned?
One of the best books. It's called Relentless by Tim Grover.
Okay, I'm going to have to check that book out. Sounds like a good read.
Yeah, it is awesome. It's fantastic. I'll send you a copy. I have a dozen of them here. I'll pick one out to you tomorrow.
I appreciate that. You might get other people reaching out to you to get a copy as well. So, maybe a few questions to elaborate on these top 3 drivers. Now, number one, you deliver exactly what your market wants. They become a bit more price insensitive because you're addressing their pain points. Can you share how you develop your offer, your product to address those pain points? How did you figure it out? How did you come to that eureka moment saying, yeah, this is what we're going to do. This is what we're going to do.
Well, first, it's just affordability. I would ask people, when I started the business, it was just me. It's just me trying to help people with their credit issues. I came from a banking background. I was a mortgage lender for a long time, and after the Great Recession of 2008, no one could get approved for a darn thing, and I would have to help them with their credit in order to give them a loan for my mortgage brokerage business. And over time, I was helping more and more people, and people would say, "Hey, can I give you some money for this?" And I would say, "Well, how much do you want to give me? What can you afford?" So that was actually the first price test. That's how we developed the first program. I actually did the work first, saw it was successful, and then asked people what they could afford to pay. What was interesting is people were willing to pay me a lot more than what I charge now, which was kind of a funny concept. So that's how I came up with it. There wasn't a lot of science to it at first, and we've probably gone up on price really the last 10 years, just slightly. And we've done that as our costs have gone up. But anytime we've gone up in price, we've added 4 or 5 layers of service on top of that in benefits that we could offer the customer. So there wasn't much science to it. We kind of let the clients dictate what they can afford. We've done a few price tests that were a little higher and a few programs that were a lot more premium. The market didn't like them, so we took them away. And we've just found the balance. We need to maintain a certain conversion of the lead volume that comes in as well. So checking a new offering is fairly easy. You put the offer out, you run the test, and if people like it, you'll continue converting the business. If they don't, you'll see the business drop. The market will tell you.
Yeah, and you have your daily metrics pulse dashboard to help you see that.
Yeah, absolutely.
So Nick, how much do you charge your customers for your credit repair services?
Yeah, great question. So right now our clients are paying on average about $150 or about $50 per credit agency each month to deal with their credit issues. A lot of the companies out there are charging, $120 per month. And one of the greater gimmicks out there is they'll work on one bureau at a time each month. They kind of turn credit repair into what seems like a membership business. We'll charge that fee for an unlimited number of accounts. We work on everything they want to work on. Anything erroneous or questionable gets worked on. Unlimited credit coaching. We give clients full access to their file. And one of the best things that we do, and something that makes us very unique, is we stop our charges after 6 months. So a lot of credit repair models have it set up so the customer is almost in this thing like a gym membership. Well, maybe they forgot they're paying $100 per month and they'll pay us for the rest of the millennia, right? Our services are capped at 6 months. They might only need us for 2, but if they do get to 6 months, they're capped, and then we work beyond that for free if they need anything else for up to a year. And our clients love that because they know they're not getting stuck in some sort of reoccurring membership where the company stops caring. For us, if we stop caring, then we're working for free. So the quicker we work, the better. And the fact that we keep our model very much about getting referrals, the service levels have to be very, very high because we have to rely on those referrals. So that's how we approach it. A little different, but it served our clients very, very well.
Very cool. Now, do you, as you are providing the service and improving their credit, is your team say, you know what, I think we're done here. I don't think you need to continue. I think 2 months is enough. Or does your customer decide if they need to end prior to 6 months are up?
Great question. So it really depends on the scenario. All these credit reports are very different. Sometimes people will come to us with 2 very minor issues on their credit report, 2 accounts that they need to get removed and they need challenged, and we work on it. And it's very clear that those items have been removed and it's gone, and we tell the client, services are over. Other times we'll get someone that has, a specific score goal. So they don't necessarily care about the number of negative marks they have on their credit report, but they have a particular score they want to hit to get a car lease or a particular home loan or a rate at a bank. So with those scenarios, the client does need to keep us, the client needs to really call the shots on that. We might want the client to have a 750 credit score, and we might think there's room to get there, but the client says, hey, I'm good at 680. I accomplished my goals. There's something else I need to be working on the credit report. I could kind of care less. See you later, guys, which is fine too. So everyone is a little different, but we work very closely with our clients. We're on the phone with them constantly, one-on-one. So that's an ongoing conversation that we have. It's not just an email alert. It's a conversation that we're having quite a bit with them.
Right. Fantastic. And how often do people come back to you, right? 6 months, the credit score is improved. They're able to get their mortgage that they were looking to get. Do you find that they come back to you, or they're pretty much in good credit score heaven after working with you?
It's a really good question. So, bad credit is usually, I call it an event. Okay, it's an event when someone incurs a late payment. okay? But it's also an event um, when they need the service. So about a third of the United States has bad credit right now. That's just a fact. They're not getting approved for much these days, okay? But a third of the United States, 100 million people, are not inquiring for credit repair. And the reason for that is they only need it when they need it. They've applied for something, they've been turned down. They're thinking of getting a loan, they're nervous about getting turned down. Okay, they're thinking of applying for a job, but they're nervous about the background check. And then they start Google searching and so on. Okay?
Okay.
So with that being said, we don't see a lot of return business, luckily, okay, which sounds a little strange. We fix someone's credit. We've over-educated them. We've hyper-educated them about everything credit and debt related past that point with multiple videos, emails, instructions, tutorials, one-on-ones with our coaching team. So we hope they don't come back. But every so often, there is an event. Something happens. A job loss causes a credit issue. A divorce. Credit issues always happen through divorce. A business flops for a client we have, and their credit takes a bath as a result. And those life events will send those people back to us. And we hate that it happens. We wish it didn't. We'd rather have them being, our disciples out there just sending us clients and talking about us all day versus them coming back to us. But it does happen. I would say somewhere between 5 to 10% of our clients will end up coming back to us in the next 5 years. That's been the trending number so far since we started the company. But we're hoping it can drop even lower.
Right. Can you share what the average credit score is before they engage your company services and what it is after?
Yeah, right now it's probably in the low 500s. We're trending somewhere in the 530 to 540 range. And clients leaving us are usually somewhere in the high 600s. Usually we're not seeing a customer go from low 5s to high 6 to 7s with our company. And the reason for this is a lot of what it takes to get over from the 680, 690 hump into the 700s is just time. So we'll get the credit where it needs to be to be what we call bankable. So they can start getting approved for things. They go from really bad credit to bankable credit. And then after that, they won't need the service anymore, but what they'll need is time for maybe new accounts to get aged, the length of history to get longer. Maybe they're just having a scenario where, we've cleaned up their credit of all the junk that shouldn't be there, but the credit card utilization rate is too high on their credit card balances, and they just need time to simply pay down those debts. And that will account for about 30% of the score. So we'll at that point let them know, hey, we've done our part. Now let's let the money roll in so you can pay down the cards, and let's let a little time pass by so the length of history on these trade lines gets a little older, and you'll have great credit. And it happens like clockwork as long as people follow the steps.
Right. Stop doing the things that got them into trouble to begin with, outside of the life events.
Correct.
Now, the second key factor, you competently and proactively ask for referrals. Can you give an example of how your team asks for referrals over the phone?
Absolutely. It really is as simple as just asking. Okay, so every sale, for example, we're doing a consultation with a client. The client decides they want to enroll. Okay. While we're on that same phone call, we're simply asking them, do you have a friend or a family member you'd like to add to this credit repair program, and we'll give them $100 off, or we'll pass on the savings to you. We'll actually ask them at the point of sale, and we'll give them an incentive to do it. And you'd be surprised how many of our clients, we think we're about to get one client, and all of a sudden, someone walks through the room and they'll do the selling for us. Hey, you had bad credit? Great. Let's add you on to this, and we'll get you signed up. Or from a customer service standpoint, clients will call in, basic customer service call. They're changing their credit card information. And we have a protocol where on every single one of those phone calls, our customer support people will simply tell the client at the end of the call, by the way, is there anything else I can help you with? Let's say the client says, no, there isn't. also, do you have maybe one or two people you could think of that could use our service? Keep in mind, anytime you refer somebody, we'll make sure we give you $100 off our program, as well as the person that sent us will get $100 off. And we'll just do a quick reminder. Sometimes you get traction on the ask instantly, and people will literally grab someone in the crowd and get them on the phone with you, which is really a lot of fun, and say, hey, can you help this person with their credit? We were just talking about this. Other times, we'll just get a phone call throughout the day from a random referral from a random person we spoke to a week ago. We planted the seed, and we've asked, and people like doing things for other people. I don't know the science behind this, but when I ask someone for a favor, it could be the toughest guy in the world, the guy you think will never want to do anything for you, and they'll go out of their way to do something nice for you. So asking and then giving them an incentive to show them that you care, that's like the added boost. But asking is even more important than giving them the incentive. I would say it's 80% of it, 20% of the incentive you give.
Right. Because I'm sure you've tested this, right? When you send out your marketing campaigns for referrals and that incentive is there, the response rate isn't as good as simply, I imagine if you just simply ask for the referral and didn't offer an incentive, you would still get a better response rate from asking with no incentive versus a passive campaign with the incentive. Is that right?
Correct. The incentive was never anything that significant. It was more of a thank you. When we started doing this ask system, this was a few years into our company. Well, actually, the ask system we always did, but adding the incentive to it, when we added the incentive to it, we didn't see that big of a significant difference in the percentage of referrals we were getting for every 100 clients, which was kind of funny. We thought it was going to go gangbusters, but that didn't make the difference. It seemed like the difference was something we were already doing, which was the ask.
Right. The ask. I think that might be the title of of the podcast here, of the summary, the ask. It's good. So, fantastic. Thanks for sharing that. It's really interesting. In regard to the daily metrics, the pulse, how you're measuring the pulse of your business, that sounds like something you created on your own, or was this an off-the-shelf software that you're able to buy and modify for your needs?
Yeah, you know what? I was running a bunch of different reports just on good old-fashioned Excel. Wages, punch those in. Am I within my percentage? Budget calculators from QuickBooks and all this garbage. And then all of these systems and all of these programs, all of these CRMs, they're never your business. Every business is so unique. So I just ended up creating it myself from scratch. It's simple. It's on one Excel spreadsheet. There are a few tabs to it. One of the tabs is the pulse. The second tab is the reverse engineering, where it actually spits out what you need to do for the goal based on some of the pulse stats like cost per acquisition, closing percentages, churn, retention, wages. So it's able to project out where I'm going based on month-to-date business. But I'm able to take that data and very, very quickly, within 10 seconds, and reverse engineer any goal I have. I can punch in $1 million net profit or $100 million net profit, and this thing will literally tell me how many more people I need to hire, how much more money I need to spend in advertising, how many more referrals I need, what my retention needs to be. It literally tells me, and it's without it, I don't think I could exist.
Right.
But the 4 or 5 things you need to look at need to be simple enough where you could jot them down on a napkin and know where your business is. It has to be that quick.
Right. Now, it sounds like you have real-time integration of all the other systems you have running, so you do see calls going through, number of asks for referrals, amount of new customer signups, and so on. It's all integrated, and you see everything live and in real time?
No, I don't. Everything I do is, the data points that I have there are probably 6 or 7 data points, and I punch them in every day. I get reports from customer service, from operations, sales, and my CFO on a daily basis before I'm even awake. I take those 6 or 7 data points. I literally pop them in there. It takes me 10 seconds, and it'll spit everything out. But I don't have it communicating to QuickBooks. I don't need it to communicate to my CRM because the data points are so simple. I'm sure I could build out a piece of software that would, but I'm probably going to spend, $100,000 on building out a one-page piece of software. And I don't see Microsoft going out of business, or the use of Excel diminishing based on software. I think it's just as prevalent and busy for a reason, because you can quickly create and adjust and customize. So I'm an Excel junkie. I live on that thing all day long.
I am too. And yes, I hear you, right? It's really easy to acquire tools and platforms to do stuff. But sometimes all you need is a piece of paper and a pen, and that's good enough.
Oh, yeah. And the basic metrics, if Microsoft said no more Excel, Bill Gates holds a press conference and says, I'm destroying Excel. I'm going to change the world for some awkward reason. You still should be able to take all those data points and, on a napkin, be able to figure out the health of the business. And if you can't, you got to wonder, what kind of business do we have? Just to think the Rockefeller was running a business with a few 100,000 employees, richest guy in the world. And he was doing this all from his mansion in Newport with no email, with no computer, with nothing.
Yeah.
And every day he knew where his business was based on one phone call. So we got all these systems, and some people still don't know where their business is. And I think we're overcomplicating things unnecessarily. Simple cost per acquisition tool. What are you paying to acquire a client? A simple churn tool. How many clients are you losing versus gaining? A simple tool that will project out your net profit and your gross sales, and your spend on HR. There are only really 4 or 5 things you have to track on a daily basis, and those things, that's it. And the data points for those things, you should be receiving those. So as a business owner, you shouldn't be creating those data points. You should be getting them on a daily basis from your captains, right?
Right.
Let them send you those data points, and then you put them all together, and then you share that pulse with your generals, and you let them know, hey, this is where we are. Thanks for the data. This is what we're projecting. Let's make adjustments today. Let's kick up sales. Let's offer something to clients to stay on board. Let's come up with our service is suffering. Our churn is up. Let's get the service levels up. Let's pay attention to what's going on. Or sometimes you just find that the pulse looks so damn good. You celebrate. Take everyone for lunch. You did a good job. Not that bad.
Yeah.
Not everything needs improvement. Just celebrate and have a good time.
Yeah, it's important to celebrate the wins. Since I know you're not behind your computer, but maybe if you can remember what you punched in, for the next set of questions I have for you, let's talk a little bit about the future, right? So for this year, 2018, you're looking to end the year at around 5.5 million. What's your target for 2019, and what does your post spreadsheet tell you in regards to what you need to do to get there?
Yeah, and here's the challenge too. We've had, at least in terms of the number of sales, we've had a 54% increase in the number of new clients year over year for a decade. Every year, boom, 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 we're just hitting these numbers. And even this year, we saw a slight plateau. And it was the first time it happened in a decade. And what we were doing is we were taking advantage of this particular marketing platform, and we were just, taking everything out of it based on the cost per acquisition we want to have, the percentages. And I think we've done a damn good job of kind of maximizing our efforts. So the challenge this year is, how do we double our business? So ideally what we want to do here at Key Credit Repair is double the number of overall sales, okay? Which theoretically could double our profit, even more profit, economies of scale, and drive up the size of our company too, which is great because we love creating jobs here. We consider it our greatest blessing, right? Being able to create a job for someone great. But the challenge is, how do we get there? So, the thing we're looking at right now, aside from just, the 5 million, 10 million, 20 million, 30 million, 40 million, 50 million, 60 million, 70 million, 80 million, 90 million, 100 million, 200 million, 300 million, 400 million, 500 million, 600 million, 700 million, 800 million, 900 million, 10 million, 20 million, 30 million, 40 million, 50 million, 60 million, 70 million, 80 million, 100 million, 200 million, 300 million, 400 million, 500 million, 600 million, 700 million, 800 million, 900 million, 10 million, 20 million, 30 million, 40 million, 50 million, 60 million, 70 million, 80 million, 100 million, 200 million, 300 million, 400 million, 500 million, 600 million, 700 million, 800 million, 900 million, 10 million, 20 million, 30 million the referrals is just a different type of referral. We see interest rates going up. The credit markets have been loosening up the last couple of years. We're starting to see some funky loans out there, and people that maybe shouldn't be getting approved for things, they're starting to get approved for things. We're seeing car loans across the board. They're at 125% loan to value. So cars are incredibly over leveraged across the board. A third of them are subprime car loans at like 20%. So we feel like my sense is the market's going to turn. And what we're going to do is put a big initiative on seeking out partnerships, referral partnerships. The lenders, for example, the loan officers of the world, they've been working with the best of the best clients for the last 2 or 3 years with interest rates that are low. Anyone with a credit issue, they've kind of told, hey, beat it, or they haven't followed up on those applications. They haven't even been willing to refer that business because they're just too busy trying to slaughter this easy business that they have, right? With interest rates going up, our expectation is the lending community is going to pay more attention to those with credit issues. As their sales slow down because of higher interest rates, the lending community is going to need to service those people in that gray area a lot more. It doesn't mean they're going to have loans to offer them, though. So services like ours will be something that's needed a lot more. Partnerships like ours will be needed a lot more. So we're putting a lot of work right now into building up partnerships with residential mortgage lenders. That's our number one. People that are trying to buy a house will take credit improvement very, very seriously. They'll do what we ask them to do. So that's definitely our best client. In addition to that, commercial lenders, business owners look at their credit as an investment in the future. They understand how much the leverage of their credit score means in the business world, and that without that leverage, a lot of them can't do business. So that's going to be our big initiative. We want to double our sales by growing out referral partnerships, strategic referral partnerships nationwide.
What's the plan on reaching out to these strategic partners and forming the partnerships?
It's a great question. The plan's got a bunch of pieces to it. The first is actually just good old-fashioned saying hello to people. Having someone on the ground every single day with a specific number of walk-ins. And I know this is going to sound a little old school for some of you guys that have established businesses, but anytime you're starting to solicit a new potential pipeline of leads, that's like starting a new business. So we're literally going to have someone, including myself, that are in a car every day and walking into places, probably 10 places a day. That'll probably be our initial target, where we simply walk in and introduce ourselves and show people our face. Mortgage companies, lenders, banks, and loan officers, credit unions. Hello, how you doing? This is what I do. Please let me take your card. Here are mine. If I could help, feel free to reach out to me. It's as simple as that. Okay, we are going to run into people that are declined, and they're going to need a resource, and our card will be on their desk.
Right.
So that's the first way.
You're not going to have an appointment in advance. You're just going to walk the streets and walk in, say hello, leave a card, brief intro, and then go on to the next spot. Is that the plan, or are you going to set up an appointment in advance and then meet them?
No appointments. The problem with appointments are people don't take appointments. People are busy, but they're not. I might have 4 appointments a week, but I'm in the office 50, 60 hours, right? So why don't I take all these appointments? Because I just don't feel like it. Because I'm lackadaisical about it. Because people just hate doing it. They don't like being solicited over the phone. But face-to-face, nobody's doing it anymore. So that's what we're going to do. Everyone's reaching out to you on LinkedIn. Great. Well, we're not doing it because everyone else is doing it.
Yeah.
You tell them, if you walk into a millennial's office to introduce yourself and you just simply drop off your card and say, let me know if I can help with anything, they'll be shocked. They've never experienced it. And it sounds so primitive, but they will think it's futuristic. And we've done a few tests with this in the last few months. It's unbelievable the response we got. And it's old school. So that's going to be the first thing. Once we start establishing a base of referral partners in this fashion, and by the way, we have a lot of referral partners in this fashion, but we're going to go out and get new ones. But once you start doing this, you can fertilize those seeds you've planted. Okay. Once those seeds start growing, which is you're getting referrals from those referral partners or those new referral partners, you can ask them for other people on their team, their coworkers at these lending institutions. They will produce more referrals for you. You know, I had one company I walked into. This was years ago when I started the business. It was in '09. I walked into an office, introduced myself randomly, established some quick rapport with a very, very nice guy named Eric. He started sending me a few clients here and there when the business was just me. The relationship grew, and I had asked him if he could introduce me to new people, and this was, again, a decade ago. And he ended up bringing me into his company. Then he moved to a bigger company. He brought me into that company. Before you know it, I had like 300 people from that company referring this business back in '09. And it was just a huge, huge moneymaker. So you start really primitively. You plant the seeds. Eventually, some of those will grow, and then you fertilize them by asking them for referrals, and you'll very, very quickly grow a business or a new pipeline of clients.
Right. Now, your team, are they spread out across the nation, and you're going to be doing this throughout the nation, or just going to be doing it, where you are today?
Yeah, we're going to start with Massachusetts just because we have a good local presence here as well. So we'll start here. And once we see it's working here, which I'm confident it will, then from there we'll start to clone it in other areas, whether it's having a business development person here, go to the neighboring states, spending some time there, or whether it's hiring people and creating clones in all the different major metropolitan areas, maybe going to New York City, Providence, going to Newark, hitting up all these different areas and just hitting the streets. Just it's primitive, it's simple, but it's very, very effective.
Yeah, I've had other conversations with other CEOs, and they've expressed something similarly, right? You want to do marketing that stands out, and you don't want to go where everyone else is doing the same sort of marketing, because now you get kind of lost in the clutter, right? But, if you send something as basic as literally something in the mail in today's era, it would probably stand out because people get so little useful, interesting mail in the mail now, right?
Yes. So. Yes, absolutely. Yeah, it's unbelievable. And the amount of time and energy we spend to be able to get in contact with someone, get on the phone and establish rapport, the amount of time, days and days and days sometimes to make a connection. We can make it instantly by just showing up somewhere and just saying hello. And it's fast, it's instant, and there's traction with it versus, maybe a cold email or something along those lines, or running banner campaigns for people in this industry where, Google calls it brand awareness. Well, whoop-de-doo, Google, thanks for the brand awareness. How about money awareness? I want cash. I want clients. I want to help people. I want to go directly to the source. So again, some old school stuff. And then, using digital remarketing as a tool to fertilize these relationships is wonderful. Using remarketing campaigns and Facebook and YouTube and having those email lists consistently see your videos and your content and your just different good content you put out there to nurture those relationships. That's where digitizing these relationships and using digital marketing as a tool to nurture them. That's where you can put your business on, or your referral marketing on, like super steroids. And that's when it really becomes very, very special, because you can touch all these referral sources You can show up in their office once a year, right? But you could show up in their inbox every single day after that. As long as you give them some value added, they'll love it. So you have to complement the face-to-face with the digital. And as long as you're giving them valuable content, I mean, it's unbelievable what it does for your business.
So what you shared with me so far about your plans to grow your business and how you plan to go about it, it sounds more like an opportunity than a challenge. Is there a challenge? Is there a difficulty? Is there an obstacle that you still need to figure out to get this plan done?
Yeah, I think there's going to be a challenge every single day, every hour. First of all, let's think of the psychological challenge. Everything great has a really high barrier of entry, even something like this. It's not something new to us, but it's got a high barrier of entry, because it's difficult to do. Psychologically speaking, walking into someone's office and introducing yourself, it's hard to do. It's not someone's comfort. Someone's comfort zone is in their house. Hi, I work from home from the couch on a laptop in my pajamas, and someone pays me some money. That's the comfort zone. Getting up every day, suiting up, and walking into people's office and introducing yourself, that's not most people's comfort zone. But because it's not, that's something to recognize. For all business owners, if you can leave your comfort zone in your business daily, what is behind it is massive, massive profits. If you are in your comfort zone right now in your business and you're not doing scary things to find new clients, then chances are your margins are probably very, very slim, right? You've commoditized not just your offering, but the way you find your clients. And that's dangerous. If all you're doing is competing for a pay-per-click, then you're toast soon. I guarantee Google is going to suck up your money and you're going to get wiped out. You need those things, and they're wonderful, but they have to be complemented. They have to be complemented by putting yourselves out there, being different, leaving that comfort zone. It's going to be a challenge every time you walk into someone's office. Psychologically, I mean, all the business owners that are listening to this right now, guarantee the biggest challenges they're having right now are in their own heads. They're not having financial issues. They're getting new client issues. And getting new clients requires you to leave your comfort zone. Leaving your comfort zone is a psychological problem. It's a psychological challenge. They're not having issues getting funding. You need funding, you get clients, right? That's what you do. They give you money, you use that money to fund your operation. So your issue typically is psychological. You can't leave that. You can't leave your comfort zone to get that next client by shaking some hands and walking into an office and introducing yourself. And maybe get that referral partner, or asking a current client that's paying you great money, that loves you, that told you they love you with their pocket. You don't have the guts to ask them for the referral because it offends your pride or your ego, or it's your comfort zone. Well, get over it, man. You want to make money, you got to leave your comfort zone. You don't want to do anything great, you got to leave it. And if you're not, you better recognize that, because you're going to get smoked soon.
Right. Now, are you planning on spending 5 days a week doing this, counting the payments, going door to door, saying hello?
Oh yeah, 5 days a week. And if I can, 6, until we grow this thing out, until we planted enough seeds that all we need to do at that point is water, fertilize, and have that thing grow on its own. And that is possible.
What do you project? If you had to pick how many months you're going to need to do this, how many months do you think it would take before it starts taking off on its own?
Great question. So what we'd like to do is take on 1,000 new referral partners in 2019. Okay, so I project that taking 6 months to really accomplish. So January through the summer, we're going to be pounding the pavement. And it could happen a lot quicker. We could take on one referral partner that's part of an organization that has 500 new referral partners, but we don't want to count on it. You go one by one, and wherever it takes you, it takes you.
Right. So you don't necessarily need to meet 1,000 people over the next 6 months, right? You might meet some that have who would then introduce you to other people within their firm, and that's where you're going to get the leverage.
Correct. But you can't go out and automatically assume you're going to find someone like that. You have to just, one by one, and then you're almost pleasantly surprised with who you meet and who you're connected to when you start going on this, networking excursion.
Right. Well, even if you just assume you're going to meet 1,000 people, I mean, that's 10 per day, 20 days a month. That's 200 per month. Do that for 6 months. That's 1,200 people right there. And yes, they're not all going to do business with you.
It's not difficult.
Yeah. So you just put your mind to
it. It's not hard. And the beauty of it is it's free. And then you can use those marketing dollars again to market them. The emails, the remarketing campaigns, the Facebook feeds, and then it's a beautiful model.
Yeah, I can see that for sure. 2 final questions for you, Nick. Who are your ideal customers, or perhaps who are your ideal referral partners, and what's the best way for them to reach you?
Our ideal client is someone that is going through a bad credit event. They've just been turned down, or they're about to apply for something because their life needs to change, a home loan, a school loan, a car loan, and they don't think they will, or they simply can't get approved. That's our ideal client. We can help them. We can absolutely help them in getting their credit scores increased very, very quickly with some quick fixes, some tips, some coaching, and then a long-term plan. Our greatest referral partners are those that are already clients. They are the disciples to Key Credit, and we love them and we value them, and they are everything to us. What comes out of their mouth about us is the world. There's nothing more important at our business. Beyond that, referral partners, banks, lenders, anybody that has to say no to a prospective client, they would be our ideal referral partners beyond the client.
And what's the best way for them to reach you and your team?
Yeah, so we can be reached 9 a.m. to 9 p.m. Monday through Saturday. Phone number here is 617-265-7900. We work in about 45 states, so pretty much nationwide with the exception of a few areas that we haven't pursued yet, but we're ready, willing, and able to help anybody that has an issue.
Would you like to share your company website as well?
Absolutely. Our website is www.keycreditrepair.com.
All right, fantastic. Thanks for joining us today, Nick, and sharing how you accelerated your company's high-value sales.
Thank you so much, Malcolm. It's been a really good time with you.
We've been speaking with Nik Tsoukales, the president and CEO of Key Credit Repair, about his company's rapid growth. For interviews with other fast-growing, high-value sales companies, or to learn how we can accelerate your firm's high-value sales through automation, visit eversprint.com.